Hey everybody, Randy Pierson here, Vice President of Life and Annuities for Gordon Marketing. Welcome to another episode of Selling Life and Annuities. And today we're going to talk about navigating the challenges of suitability. Stay tuned. All right, so once again here with me, I've got Tim Luby, our RVP of Annuities with Gordon Marketing. And Tim, we're going to talk about suitability. You know, I'm a 35-year veteran in the insurance business, and I distinctly remember when I came into the business and I brought on board a new client, there was no suitability. There was no, I filled out an application. I wasn't even required to create a file for them. And now it seems like, holy cow, suitability and, you know, all the stuff we've got to do is becoming rather onerous. You know, where does all that come from?
Yeah, well, it's interesting. It's sort of been driven by the industry's desire to regulate what we're doing on the annuity side, and the carrier's response to making sure that they're not liable, if you will, for allowing a sale that's not in the client's best interest to occur. So that's really kind of what it comes down to, making sure that it's suitable for the client.
So client's best interest. You know, I think we would all agree. We all want to try to do what's in the client's best interest. But I mean, what's really driving? Who or what is really driving all of this suitability requirements now in our business?
Well, it's the industry's regulatory body and the carrier's response to that. You know, the National Association of Insurance Commissioners, regulating what we do with illustrations and also discussing what makes for a suitable sale for customers. And it's the carrier's response to that and the need for them to not accept liability in that situation.
All right. So I guess we all get that. What I think a lot of advisors out there, they like or are interested in the stories, right? What are some of the scenarios that you guys are coming across your desk for the most part that cause advisors problems in trying to get business pushed through?
Right. Well, probably the most common ones are around the source of money. You know, the biggest thing that often we run into from a hurdle is surrender charges. You know, if the existing contract, depending on where it's coming from, has surrender charges. Most carriers don't want to look at anything that has less than 3 years in it. And then surrender charges, some people would say not over 3%. Many carriers are not comfortable with anything over a 5% surrender charge. So those are probably the biggest issues, surrender charges, source of funds, along with sort of the percentage of someone's assets that are in annuities overall.
So surrender charges, I mean, what about, there's a lot of bonus products out there, bonus annuity products. Let's say a client has a 7% surrender on their existing annuity, but want to move to a new product that has a bonus. Does that negate some of that surrender charge issue?
It depends on the carrier. There are some carriers that will look at a higher surrender charge if there's a bonus that's going to offset that. There are other carriers that really look at the net surrender charge regardless. Along those lines, there's often some questions about if there's a positive market value adjustment that reduces the surrender charge to some degree. There are carriers that will look at the net surrender charge, and if it's below their acceptable limits, they'll work on it. They'll look at it. There's other carriers that won't. If the surrender charge is above their limits, even if it's offset, they may not consider accepting that case.
So it sounds like, you mentioned there that there are some nuances, some difference between carriers and how they might handle suitability issues. Can you expound on that? I mean, what do you see in the industry, differences between carriers?
There's some pretty good differences. They're all up against the same challenges. They all have the same desire to make sure that things work right, but many of them look at it very different ways. So there are some carriers where we just know if it's less than 3 years old, if it's more than a 5% surrender charge, it is not going to happen. There are other carriers that are very strict on the percentage of assets or even liquid assets that are allowed into an annuity. Some, won't go above 50%. Others, we can creep up to 70, 75, depending on the situation. Some don't look at the percentage of assets as much, and they might more look at how much of their expenses are covered. They may want 6 months to a year, maybe sometimes 2 years of expenses covered in liquid assets. Yeah,
that liquidity issue is huge, right? It's huge. And it seems to me, I know in my experience, that liquidity issue is one of the biggest hurdles that advisors have to jump across. And, clearly the suitability issue is becoming bigger, seems like every day in our industry. And sounds like you've got a great handle on it. I know some of the rest of our team have a great handle. How can we as an organization, Gordon Marketing, help advisors out there to avoid the pitfalls of this suitability concern?
Yeah. Well, I guess the big thing is, call us. I had an advisor call and he's got some clients that have annuities already. And he's like, They're just annuity junkies. They love annuities. Well, I love annuities too, and I think they belong on everybody's portfolio. But there are carriers that just won't take another amount of money from a client. So that's really important. So calling us and discussing the case in advance so that we can sort of determine what carrier might be a good match for what they're trying to do, for what that client's situation is probably the best thing. And then we also have a white paper that's available. So, if you want to contact us for our white paper on the top factors that you need to consider for suitability to help your clients, we'd be very happy to get that out to you as quickly as possible.
I think that's the key, right? We're here to help. If you're an advisor out there and you're interested in writing more annuity business, growing your income and revenue, as well as, of course, helping your clients, reach out to us. Reach out to Tim, reach out to myself or any member of our staff. We're here to assist you in any way we can, running good quality business, making sure it stays on the books. So with that, don't forget Tim's white paper. If you want to learn more about the suitability issues, reach out to Tim for that white paper. And we're going to call this episode of Selling Life and Annuities to an end. Once again, I'm Randy Pierson. I've got Tim Luby here. We're happy that you took the time to watch our video. Stay tuned every Tuesday for new issues, new episodes of Selling Life and Annuities. Make sure you click subscribe at the bottom of this video and the notification bell. And we will see you next week